Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, October 19th, and we are coming at you after a pretty much a round trip since Monday, which is interesting enough. Last week we saw a rise on Monday and Tuesday. And of course, equities actually reflected that, as we rose in the morning of Monday. This is our range for Monday. We opened, or we headed higher into Tuesday evening, and then had a nice little sell-off at the open yesterday before recovering towards the close. Now we are, fully back to the range that we were at for Monday. And I know a lot of people were expecting some bullishness out of equities. I heard a lot of people start calling for 3,900. Personally, I thought 3,800 might be back in the cards. It still potentially is. We do still have a litany of tech and consumer discretionary earnings going into this week. Today we have IBM and Tesla at the close. We still have airlines and things like that. So a lot of questions about the economy and the outlook for these core businesses will be known towards the end of the week, which does make downside possible because there hasn't been very positive reports of what is coming in the future. But of course, if things do look decent for the previous quarter, the previous months, and guidance isn't terrible from some of these larger companies, then we could see a bit of a boost. But to basically have that happen, in my opinion, equities really need to be able to survive this 3680 to 3700 or 3680, 3690 level. If we start breaking below, these Thursday highs, then we start to get back into the range that we were trading in for pretty much the full this full week of the 9th all the way through the 12th and 13th, prior to CPI. So we could basically slip back in there and continue to kind of form this larger range before either a decision is made in one direction. But I think anyone's crystal ball on this market has been very tough sledding. We are at a 50% kind of clawback. So if I draw my fib retracement here, we are on we are right at the 50% mark for the clawback for the S&P 500. And like I said, if it can't survive the current level, which is 3675, really has a last hope at 3650. But now you're starting to get right near the top of the previous trading range, which obviously you want to bounce off of. That coincides with this 100-day moving average. You really want to bounce off of this, at least back towards this 200 moving average, else you get stuck underneath these moving averages, and then you start ranging in a very ugly fashion, which typically ends up leading to more downside, as we've seen previously. So equities pretty much at a sort of a crossroads right now. We are at the Monday range, and of course I think 3650 is really as low as we can go. Of course, that also contends with the low on of last Friday before we headed into the low Friday's opening low, I should say. So again, if that fails, then we're probably headed back into 3600, 35, high 3500 area for the S&P. So Bitcoin sentiment, moving it back towards what is supposed to be the fun market. Bitcoin sentiment has flatlined in bearish territory. Oddly enough, Ethereum sentiment continues to rise. I have a feeling this is because the deflationary conversation around Ethereum has continued to pick up. Many coins or many projects that have launched on there are soaking up a lot of activity, making ETH deflationary. I've seen a lot of chatter about that in a positive light, but that doesn't mean that that's going to translate into immediate positive price action. Just because it's deflationary doesn't mean that your supply is decreasing faster than your demand is decreasing. And if you know basic supply and demand, if you have decreasing supply and similar demand, your price isn't going to change a whole lot. And if you have decreasing supply and decreasing demand, it's certainly not going to have the same impact as if demand was steady or increasing with a decreasing supply. Obviously, decreasing supply, increasing demand, best case scenario, but decreasing supply with lower demand or similar demand is not going to help price a whole lot, at least in the short term. So that's something to consider there, and why I believe that we're seeing that kind of outlook in for Ethereum. Now, I must say, before I move forward, I was incorrect yesterday on my outlook for Bitcoin and Ethereum. I thought we might head higher back towards the recent highs of yesterday, but Apple, I believe it was right around here, so it was around 2 p.m. Eastern, 2:30 p.m. Eastern, somewhere on there. Apple reported that they were decreasing iPhone 14, I think, Plus, or one of the lesser models, the lesser expensive models. They were decreasing production due to decreased demand. Now, that basically sold off the entire market instantaneously, and then we immediately jumped right back to where we were before that. But the report also said the demand was higher for the more expensive models. So that's why I thought it was a very silly kind of market report. But of course, any production decreases for Apple is definitely signaling a demand issue. And eventually we trickled back down towards the lows overnight. And of course, where we are now, we did have a bit of a jump right after the open, but nothing very positive. So another reason that we did have a bit of a spike later in the afternoon after close was Netflix reported very positive earnings. I think Netflix jumped 10 to 14% in the after-hour session. They're not going to be giving guidance for Q1, unfortunately, so that'll be very interesting to see how that stock plays out. But that was the reason for the leap yesterday. And of course, if we have good earnings after the close today from potentially Tesla, potentially IBM and others, then we could see potentially another boost like we saw yesterday. Now, it must be said that Elon is expected to sell between $5 to $8 billion worth of Tesla stock to complete his Twitter deal. Who knows when that will occur? But that is the rumor. It's believed that he needs $5 to $8 billion to complete the Twitter deal. Most of that will likely come from Tesla, and so that's something to look out for, as Tesla definitely moves and shakes the indices as well. So, as for Bitcoin now, we are at 19.1. As we said yesterday, need to hold that. We've been kind of saying that for quite a while. This has just been a detestable range. And so basically, if we can hold here, I would say we're back up to the 200-day moving average. It's about 19.4 flat, as of where it is now. If we can't survive that, we're obviously back here. If we have enough bounces up there and cannot break it, we are certainly headed lower. 18.8 is definitely, as we said yesterday, a favorite for a bounce. 18.6 also a favorite for a bounce. If it ends up making down here, I wouldn't be surprised by some ping pong action around here before it lifts up. I don't think the market's going to give us anything easy, but I still think that Bitcoin is going to follow the S&P 500 to a certain degree. It is worth mentioning that yesterday, when the market opened, Bitcoin fell while the S&P 500 continued to rise. Well, of course, I should note, the market immediately fell and then rose back to recent highs. Bitcoin did not. It continued to fall back to recent lows. So clearly, crypto as a risk category is, lessening in terms of interest for risk investors and risk traders, which is very unfortunate. That could change, but that's currently the case right now, given the lack of volatility. So basically, 19.8, 19.6, we could ping pong around. If we can hold here, 19.4 is first up. If you can hold 19.4, then you're at 19.7. You maybe break this trend and head higher. Or you just have a detestable ping pong in between 19.1 and 19.5, maybe up to 19.6. And scalpers, have their dreams made by just kind of ping ponging around. But it's very tough sledding right now, especially with bearish sentiment as well. Things are not looking very positive, especially with this weakness compared to the S&P 500. So as for Ethereum, looking a little bit stronger than Bitcoin, but it's been in a much tighter range as compared to yesterday. We had that leap on Netflix earnings. We've trickled back down, and we're basically in the same exact scenario that we were discussing yesterday. Head back up higher to 1340. Hold 1280. Potential ping pong between 1280 and 1340. If it breaks down, then we would expect, 1250 all the way down to, 1240 to probably hold. And if that's the case, we probably see some ping pong action right there too. Or if it quickly gets bought, then we're swinging right back. Actually, let me get rid of that. Or if it gets bought, then we're swinging right back up to, the 1300 level for, potentially another range play. So basically, the moral of the story is Bitcoin and Ethereum, not much has really changed. If the S&P 500 gains some sort of strength, it maybe attacks the range highs. If the S&P grows weaker, Bitcoin and Ethereum definitely back down to where they had some volatility after CPI. And sentiment, of course, for Ethereum is positive. It is worth noting. It could potentially move stronger than Bitcoin. But my personal thesis is that the deflationary conversation has been ongoing for quite some time. And I've seen a lot of chatter about that in recent times. And of course, Bitcoin sentiment less than positive. So key level, of course, Ethereum's at a key level. You're going to right around 1300, 1280, another key level, 1250, 1240. On the high side, 1330, 1340. For Bitcoin, 18.8, 18.6 on the low side, obviously holding 19.1, which it needs to. If it can move higher, 19.4 first, then 19.5, 19.6. And then we can talk about flipping this POC and flipping this downward trend. But we have to see when it gets there, things don't look terribly strong. Of course, the DXY, the dollar index, definitely looking like an asset that you would want to buy. This definitely looks like it will want to end up moving higher. It's a very, kind of a head and shoulders on RSI. It's been holding this trend very well. It's also been holding this trend very well. Obviously, my drawings are ugly, but you can see where that trend is. So if the DXY continues to gain strength, the dollar index, then you will most likely see risk take a beating on the heels of that, as typically the dollar moves inverse risk assets because you can buy less risk assets with a stronger dollar. So good luck, happy trading. I know it's confusing and annoying, and this market's not very sexy, but holding on to your capital is sometimes better than making or risking your capital. You definitely want to preserve what you have. Risk taking is for when the opportunity is ripe. We just don't get into fights and crazy scenarios without thinking that there's some sort of reward at the end. So sometimes you don't have to trade. Sometimes you can just relax and wait for the volatility to come. We know our key levels. We'll continue to monitor them and short and long any extreme moves. And that's unfortunately just where we're at right now. As soon as we move into a new range, I'm sure we'll have some volatility and fun. That new range could be in 20K. That new range could be in 18K. It's really going to depend on where the dollar and equities run. And I think, there's a lot of topsy-turvy information out there right now because earnings, yesterday's earnings were positive. Bank earnings were positive. Tesla might have to sell a bunch of stock, but the earnings may be positive. We're going to hear from airlines and tech companies and Johnson & Johnson and other consumer discretionary on what consumers are doing. So it's better to listen, understand what's going on with the market, and assess. And you don't, if you feel the need to trade, just paper trade or make mental notes on what actions you would take and what risk you would take, and make the calculations at the end and gain a little bit of confidence and manage your risk. So there's plenty of options in a bear market. Obviously studying, preparing, making sure that you're ready for the next opportunities is probably your best idea. You don't have to take immediate action with your money every single time. So I'll leave everybody with that. Good luck, happy trading, and I'll see everybody tomorrow.